Good morning, Jamie here. It is Wednesday, 10 a.m. Wednesday Central Time, which is my normal time to come here and talk to you guys. So I am live right now. I'm live on YouTube. If you're watching me on YouTube, make sure to like and subscribe. Also, I am live on my Balance CFO Facebook page and on my Financial Literacy for Women Business Owners Facebook group. So if you're not in that Facebook group and you're a business owner, come on over and join us, jamietrall.com/group. We're having conversations about all of these things over there and more. So, hi guys, tell me you're here when you're watching. Okay, I see some people. Make sure if you're watching me, especially in the Facebook group, that you hit the thing up above that tells you in the directions to give StreamYard permission to see your name. That way I can tell who you are when I see your comments. Otherwise, it just says Facebook user, and that's no good. So good morning to everybody. So we've had some developments, actually probably maybe even right now. They are scheduled to vote on the newest stimulus package. So this is the 1.9 trillion with a T stimulus package, and it is set to be very wide sweeping. So there's a lot included in here, and it will pretty much impact everybody in some way, shape, or form. So I'm going to go over what is in it. And we're going to talk a little bit about the things that you can expect to see. And then also some of the challenges that it brings up, just given the timing, specifically the timing with filing taxes and things like that. So no, Jody, once you do it once, usually I can see you going forward. So I always love to see the monkey on your head, Jody. So I know it's you. Okay. So let's jump into sort of where we're at in the process. So right now, the bill has gone back and forth, started in the House, went to the Senate. Senate changed it a little bit. So now it's back to the House. It's going to get passed, you guys. It would be shocking if it didn't. And then it will be signed. I'm guessing it will be signed as soon as tomorrow. So that means this thing is pretty much a done deal. Now, I say that, and then somebody's going to pull something, but there is no expectation that there will be issues with the passage of this bill. So let's talk about what's in it and how it's going to impact us. So let's talk first about the stimulus payments, because I know everybody's interested in those. And so while that's not just a business owner thing, I think it's important to talk about. So $1,400 per person. So this is similar to what we've got in the past, but there have been some modifications. It's not exactly the same. So $1,400 per person. That includes kids, and that includes adult dependents. So that's new. That means college students. That means older adults who might be taken care of. All of those people will be included in that calculation, $1,400 per person. Now, the income limits are similar, but not exactly the same. It phases out sooner. So just because you got a check last time doesn't mean you're going to get one this time. So the income limits for this specific $1,400 per person are essentially $75,000, right? So under $75,000 in adjusted gross income. So remember, your adjusted gross income is, I believe it's line 11 on your 1040, but it is actually after kind of the standard deduction and things like that are taken out. So it's going to be a little bit lower than what your total actual income is. So you want to be looking at that. But if it's under 75,000, you will get the full amount of the stimulus payment. If it's between 75 and 80, you'll get, and that's for my single filers. If it's between 75 and 80, you'll get a phased out amount. And then over 80,000, you're not going to get anything. So that used to phase out totally over 100,000. Now they've brought it down to 80,000. They're trying to focus on giving it to people who need it the most. For head of household, I don't normally talk about you guys, but I've got some questions about head of household. The numbers are 112,500, I believe. If you make under that as head of household, you get the full amount. Yep, I'm right. And then it phases out fully at 120,000. So above 120,000, you won't get anything if you are head of household. And for my married people here, if you marry filing, or if you are married filing together, right, then you are going to phase out at 150,000. If you make 150,000, you get the whole, or under, you get the whole amount. Between 150 and 160, it starts phasing out. And at 160, it phases out entirely. So if you're above that in your adjusted gross income, you're phased out entirely. Now, here's the question though. We are in March, you guys. So what year are we talking about this being based off of? So, right, our previous ones were essentially based off of the most recent tax return that we had filed. Same thing here, right? So technically it's based off of the most recent tax filing. But there's a lot of caveats with how they've set this up. So I've spent some time going through this morning. It's actually kind of complicated for how it's going to work. But I believe right now, it's mostly going to be based off of if you filed 2019 at this point, even if you filed 2020, I think they're going to end up basing it off of 2019. And the reason that I say that is because of past history. Last year, even people who had filed their returns a month or more earlier, right, which they just opened up the portal not even a month ago to start filing your returns. So even if you filed your 2020, I'm not convinced that they're actually going to base it off your 2020. I'm not sure that the IRS really has the capability to do that. So I think in most cases, it is going to be based off of your 2019, assuming that you have filed it. If you haven't, it's probably going to go back to 2018, essentially going to be based on your most recent filing more than likely. So a lot of people have wondered, should I rush to get my 2020 in? Especially if maybe your 2020 is lower, which a lot of people it was, right, than your 2019. Maybe you wouldn't qualify in 2019 and you would in 2020. Should I rush to get it in? My answer to that is probably not. Why? Well, because this thing's, like I said, set to be signed probably tomorrow, with checks starting to be cut potentially even as early as next week. So even if the legislation allows, and it does, them to use the most recent tax filing on record, it also it defines that as being actually processed by the IRS. So the chances of, even if you filed today, of that getting processed by the IRS to the point where they're going to then be able to use your 2020 is unlikely, but it's okay. And the reason that's okay, even if you fall into that bucket of, oh shoot, I did not qualify in 2019, but I would qualify in 2020, and you're thinking you're going to miss out on it if you don't file that, don't worry. There's a caveat in here for you guys. So overall, and you guys who are in my group have seen me posting about this, I am a proponent today, right? I'm a proponent today of, if you asked me, should I file, if you've done all your tax work and you're asking me, should I file my return today? My answer is no. My answer is no. Now, if you're filing your business returns, if you're an S Corp, C Corp, then maybe you can go ahead and file those. That's less of an issue. However, the only caveat there is if you are wanting to go back and claim your employee retention tax credit, and I have a whole YouTube video on what that is, but it's worth up to $19,000 per employee. For last year, it's worth up to $5,000 per employee, okay? You can claim it back retroactively. If you're planning to do that and you haven't yet filed your 941X to do it, and if you don't know what I'm talking about, just go watch my YouTube video on it. I'm not going to get into details, but you're planning on it, then you might want to extend your business tax return, because you cannot, and I'm talking to my S Corp, C Corps here, you cannot, or partnerships, take that as a deduction. You cannot take the wages you paid with wages that you got your employee retention tax credit on. You can't take those as deductions on your business return. So if you file your business return and then later file a 941X, you're going to have to go back and amend your business return. So that's a specific case there. But for those of you, when we're talking about personal tax filings, which is what matters for your stimulus checks, that's what matters for this unemployment change that I'll get to, right? For those, the deadline's typically April 15th. Could it be extended? Maybe. They were saying no, but with these changes, I wouldn't be all that surprised. I think it's pretty 50-50 at this point. Last year, they waited until, I believe it was right after the business filing deadline to change the rules for the individual tax return. So it still might be extended. But I'm generally saying don't rush, because here's the thing with your stimulus checks. Even if you're in the scenario where you didn't apply or you didn't qualify in 2019, you did in 2020, or maybe you had a baby last year, you have more dependents and you want to get that money. What they have put in is this kind of caveat. So it's really like this checkpoint system. So ultimately, the way your stimulus checks are going to work is when they decide, they're going to make the first determination is whatever your most recent filing is on file that they actually go back to. And like I said, I think for most people, it's going to be 2019. They're going to look at 2019 and say, do you qualify? And if you do, great. Then you get the full amount, and that should be sent to you like your other stimulus checks have been or direct deposited. So that's kind of the first checkpoint. If you didn't qualify, that's when we go to kind of checkpoint 2, which is once you file, you have until what they're calling the additional, what are they calling it? Hang on, what's the word? The additional payment determination date, okay? Stay with me here. This is if you didn't qualify in 2019, so you didn't get your check, but you would have qualified in 2020 because your income went way down, so it's under the limits in 2020, but you haven't filed your return yet. The additional payment determination date is basically the later of 3 months after the filing deadline, which currently stated April 15th is the filing deadline for personal. So 3 months later would be July 15th or September 1st, 2021. So why do they have, 3 months after the payment date, the filing deadline or September 1st? I believe it's because they're hedging their bets in case they change the filing deadline. So if they move the regular filing deadline to July 15th, then that means this additional payment date would be September 1st. If they don't move the filing deadline, this additional determination date would be July 15th. Yeah, I think I said that right. So what does that mean? So that means if you didn't get your stimulus check, right? If you either didn't qualify or just didn't get it, and you would qualify in 2020, as long as you file your return by that additional, I keep forgetting what it's called, the additional payment determination date. I'll get it down. The APDD. Then, because we need more acronyms, you guys, then you will be able to get it then. So that's what I'm saying is don't rush. Because even if you file your return right now, more than likely, it's not going to be based on that. And what's going to happen is if you do qualify and you get it in, let's say by July 15th. So for most of you, I would say, yes, when you extend, it goes all the way, your personal return to October 15th. I would try to get it in by July 15th, unless they move the deadline for filing, and then by September 15th, or September 1st. But I know that's a lot of dates. I think I'm going to do a video just on this. What do you guys think? Like just on how all of this plays out with the timing, because it impacts the timing of when you file your return to make sure you can maximize the stimulus that you can get. So I want to make sure that everybody does that, because here's the thing. Let's say you don't file your 2020 return and you would have qualified for it in 2020, but you don't file it until, October, right? You extend, you issue an extension, and you file on October 1st, let's say. What happens then? Well, you missed that additional payment determination date, right? And now we need to, now the next time you can get any money is on your 2021 tax return. But what if your income went back up in 2021, right? What if it was just 2020 that would have qualified and you don't qualify in 2021? If that's the case, you get nothing, okay? So that's why it's so important to watch these dates. And I'm going to do, okay, so yes, people are saying they want a video. I'm going to do a video and maybe a graphic that'll help to actually explain this in a way that makes sense. But the moral of the story for you where you're sitting right now, for most people, it makes sense to hold on filing and maybe even issuing an extension. That doesn't mean hold on doing the work. So my poor tax preparers are going to freak out at me because they're like, oh my gosh, everybody's going to, come to me on April 10th wanting their taxes filed. Still continue to do the work. It's just the pressing of the button to file you might want to hold off on. I do recommend people actually get their taxes together and start working on it and then make the decision on what makes sense. Because once you know your numbers too, then you're going to know whether what the best timing is for you to file your return. So that's what I'd say right now. Don't be in a rush. Be in a rush to get things together, but don't be in a rush to press the filing button unless you have a specific tax situation and your accountant tells you otherwise. But this is for most people. Yes, graphics. All right, graphics will happen. Graphics will happen. I will. I'm sure you did. And it's fine. Even if you can always amend your return. So if some of this applies to you, and I'm going to talk here for a minute on unemployment. Unemployment is the biggest reason to put a stop on your filing for right now. at least until they have updated it for the changes. So here's why I say that. So if you were somebody that got unemployment, okay, one of the big changes in the stimulus bill is the first $10,200 per person. Okay, so if you're husband and wife, that's and you both got the max, that's double. But $10,200 per person, non-taxable in this new bill that is being passed probably right now. So what does that mean? If you've already filed your taxes and you got unemployment, you got taxed on all of that. And so you're going to have to we'll have to wait and see what they say. But more than likely, the way that you're going to get that money back is to file an amended return. Not a big deal, but it's probably easier to just hold off on your taxes than have to go through the process of filing an amended return to get that money back. Okay. Because that could be a couple $1,000s for some people, right? So you will want to do it. But I would hold on if you got unemployment during 2020. That is for people who have total household adjusted gross income of under $150,000. Doesn't look like they're saying single, married, whatever. They're just saying household income if it's under $150,000. You get this exemption for the first $10,200 of unemployment benefits you received as being non-taxable. If you make a dime above $150,000, then you don't get that tax exemption. So that's another just important thing to be paying attention to when you're working on your taxes. Okay, so hopefully that makes some sense. So the other thing with unemployment, it's been extended. So now it goes through September 6th. So that includes pandemic unemployment assistance. I think it goes up to something like 74 weeks now. So you can get a lot of unemployment, a lot more than you could previously. And they're adding, there will be $300 extra per week that you get through that time period as well for those who are on unemployment. So that's the same thing as that federal pandemic unemployment compensation, FPUC. So $300 a week. So there was talk of 400, they took it down to 300, but they took it down to 300 and then made the first 10,200 non-taxable. So that was kind of the way that they bridged the gap between those things. Let's see. So that is sort of the situation around unemployment, and I hope that is helpful. Okay. So we talked about stimulus checks. We talked about unemployment, including PUA, targeted EIDL grants. There's more money going to targeted EIDL grants. So who qualifies for a targeted EIDL grant? Well, you have to have to be able to show a decline. I think it's 30% over an 8-week period. But more importantly, you have to be in a low income area. And the SBA has a specific definition of what that is. They have a map out there. I've posted it in the group before. Somebody wants to post it in the chat, they can, but there is a map where you can go look. Now, it doesn't really matter that much because you can't apply for it. It's only for people who have already applied for an EIDL loan or grant previously back in 2020. Okay, so whether you got the grant or not, you can get this targeted grant. So previously, you got the EIDL grant, it was $1,000 per employee. So then they've already, in the previous stimulus bill, they essentially had a provision for low income areas to be able to get up to $10,000. So if you only got $2,000, if you were in a low income area and you applied and you met the requirements, you could get that extra $8,000, right? Now they've added another $5,000. So now you can get up to $15,000 in EIDL advances, grants, right? So it's a grant, but only for low income areas. And what's happening is the SBA will reach out to you. So again, you will have had to have applied for an EIDL loan last year, regardless of whether you took it or not, you had to apply for the loan. And they will give you a grant, and they will reach out and have you apply and say, hey, you are in a low income area, so you can apply for this grant. Don't miss that email. Be paying attention. Do some searches for that email, but it's called the Targeted EIDL Advance. And so then you will be able to apply for that potentially and get the advance. So lots of people have been getting those emails over the last probably month or so. So I think it's still ongoing. They're basically going through and allowing people to do this, but this is extra funding, and now you can get up to $15,000. So there you go. It's so there's a lot of help out there, specifically if you are in one of those designated low income areas. I know this is also a frustrating thing because of the fact that a lot of people are like, hey, I suffered a lot, but I'm like across the street. The amount of people that are like, here's the map, and I'm literally like a block away or right across the street. It's a weird map, honestly. It's different than other ones I've seen. It's based on like slightly tweaked information from some of the other maps that are out there. So you want to use the official one from the SBA website to see. But again, you're not going to apply. They're going to reach out to you based on the information that you put on your application if they believe that you could qualify. Oh, yay. So here's the map. If you want to go check that out, I'll leave that up for a minute for those of you who want to pull up a different tab and go search your address and see if you might qualify. But again, this is for people who applied for the EIDL loan. Even if you applied after the advance ran out, so the advances ran out in July, even if you applied last year after the advances ran out, this applies to you, but not if you applied in 2021. So the EIDL loan program, still open though. The loan program is still open. It's a low interest loan. It's an emergency loan. So that may be something to look into too if you have not gotten an EIDL. Yes, in total, you can get up to $15K EIDL grant, $15,000 in an EIDL grant if you're in a qualifying low income area and you can show that you have a 30% decline. Basically, they'll have you fill out your gross receipts for every month between 2019, 2020, and the beginning of 2021. So it's like a table that says, okay, tell me your gross receipts, meaning the amount of revenue that came into your business, January 2019, and you write it all out. And that will help you they will then use that to determine whether you had a 8-week period that you're down at least 30%. And if you do, you should qualify then to get the full amount of the grant, which is now $15,000, not 10. So even there are some people that are getting the thing saying, hey, you're eligible for an additional grant. And they're like, wait, I already got a full $10,000 because I have over 10 employees. Well, that is the reason why. You also have to have 10 or fewer employees, at least for this additional $5,000. So it won't apply if you have more than 10 employees for this specific extra amount. So potentially, if you already did get the full amount, then you may not be eligible for more. I take kind of back what I just said, but if you got the email anyway, you might as well apply and see. Let's see. We'll have to wait and see what they do with this. They may automatically adjust them. I don't know that many people have already been paid out. I know people have been approved. I'm wondering if part of the reason was because they were waiting on this. I'm not sure. So let us know what you end up getting. Let's see. So if you never, what if you got the 1K but never signed anything about the rest? Do you mean the EIDL loan? So you don't sign anything for the advance, and then you, if you qualify for the loan, they would offer you the loan. You could sign the loan and take the loan, or you could not. Either way, if you're in a low income area, they will reach out to you and potentially offer you more of a grant. So that's kind of a separate process. Yes. So after you receive your invitation and complete the revenue request, be on the lookout for future emails for tax transcripts, etc. Yes. So keep monitoring your inbox. Don't miss stuff, you guys. I hope none of y'all have an inbox that looks like mine, because my inbox is not one. I miss a lot of things in my inbox. So make sure that you're routinely checking to see. It should be coming, I believe from an SBA.gov email address. So that's how you can usually tell. That's also a good way to tell whether somebody is a scammer. SBA.gov is the official email address. So what number of employees needed for the full EIDL grant? Is it still 1K per employee? No. So the employees don't really play in, except now I did see in the bill that this additional $5,000 to get to the $15,000, you can only get if you have under 10 employees. So if you had more than 10 employees, I don't think that you could, which is kind of a weird rule because it seems like if you had more, you would need more advance money. But the 1K per employee was the original rule. You should have already gotten that. If you didn't get that, then you could be eligible again. Still, you're eligible for up to $15,000 now with this new rule. Okay, let's see. Okay, so that's that. I also want to really mention there's a new program, a new grant program out there specifically for restaurants. Okay, so and when I say restaurants, that's restaurants, bars, caterers, food trucks. Let's see, taverns, lounges, brew pubs. I mean, I think this is tasting rooms, tap rooms, whatever you call yourself, right? So it is food stands, right? If you have a hot dog stand somewhere, this could apply to you. There is a new grant. It is called the Restaurant Revitalization Fund. For those of you who are in the food and beverage service, this could very well apply to you. So $25 billion is being put to this new restaurant revitalization fund. You can use it pretty broadly for operating costs in your business. And the way they're calculating it, this is amazing. The way that you're calculating it is your 2020, let me make sure that I get this right. It's going to be based off of your 2020, subtracting your 2020 revenue from your 2019 revenue. So whatever your revenue decline was, up to $10 million per entity or $5 million per location. Any of you guys who are in this, in the food and beverage industry, I need you to like come back and make sure that you hear this. 2020, you're going to take your 2019 minus your 2020 revenue. So for those of you who had a huge decline, and yes, that's even if you got a PPP, even if you got other funding, it's revenue versus revenue, right? This is in reference, we're talking right now about the Restaurant Revitalization Fund for restaurants. This is not the PPP. This is a brand new program, $25 billion of new money going to this. It is massive. It can be used really broadly. You can get a whole bunch of money, not too dissimilar to kind of what they're doing with the Shuttered venue grant. So there's also Shuttered venue grants. If you could apply for both the Shuttered venue grant and a restaurant and this restaurant revitalization fund, you are going to need to you're going to need to pick one because you can't get both. So go look and see which one is best for you. The Shuttered venue grant was really for like music venues, live concert halls, things like that. Those are available as well. But the Shuttered venue, the Restaurant Revitalization Fund, it's really wide sweeping. So it does say it sets aside $5 billion for eligible applicants with 2019 gross receipts of $500,000 or less. So again, they're kind of sticking with the theme of trying to get to the little guys and making sure that there's money carved out for the little guys so that the big guys don't swoop it all up. And the bill also charges the SBA with awarding the other $20 billion in grants in an equitable manner to eligible entities of different sizes based on annual gross receipts. During the first 21 days of the grants, the first 21 days they're available, the SBA will prioritize applications from restaurants owned and operated or controlled by women, veterans, or socially and economically disadvantaged individuals. I don't have more information than that, but that is what is included in here. So that's an industry I know that's been hurt. We've seen restaurants closing around here like crazy. So I'm really glad to see something meaningful. I know that they got a little bit of a step up. They could use for PPP second draw. They could get 3.5 times payroll versus 2.5 times, but this is meaningful. So I just sent this information to a whole bunch of my restaurant owning friends this morning, and caterers, like I said, caterers, food trucks, like all of those things would apply to this. And it is huge. And I want you guys to be in the know about it. Okay. Okay. Let's see. It is not, but it's in this stimulus bill. So it will be active. It's probably going to take them some time. Again, like even the Shuttered venue grants are taking a long time to get off the ground. So because this is a new type of grant, it's probably going to take a little while to get off the ground, but eventually it could be really, really beneficial. So I expect it to take maybe even a month or more to get them to kind of get their act together before they'll take applications here. But the nice thing is I don't see anywhere where it says you can't get a PPP loan. So you don't get stuck in that like, oh, do I apply for PPP or do I do this? Right. It will be really, really helpful. So hopefully that was good news to somebody. So those are the main things. Let me just check my notes and make sure that I have talked about the primary things. There's also some other great things in the stimulus, like expanding the child tax credit. It's child tax credit, which we already have, is going to get bigger. And you're also going to get those payments up front rather than having to wait forever for your tax return, which I think will be really helpful for helping people in the moment. There's some other things in there for childcare, just expansions on some of the things that have already happened. So I haven't looked in detail. There are some things in there about childcare. It expands the Child Care and Development Block Grant, which there was already some funding towards, and the Child Care Stabilization Fund. I don't know a ton about those things, so I can't go into a lot of detail. There's also some childcare subsidies in there for low-income people. So there's a decent amount in there for childcare as well. Be on the lookout for more information there. But that is all going to be hopefully helpful for that industry as well. I haven't, let's see. Did they say we can get the PPP change if we already received it from the net income? No, as of right now, you cannot do that. So there's no way to retroactively change it. Some banks are even telling people they can return it and reapply. That makes me super nervous as the person who's like bird in hand versus two in the bush. Two in the bush? Is that right? I don't know. So you just have to think about what you want to do there, and you can talk to your bank. But as of right now, I have not seen anything saying that it is officially retroactive, which is unfortunate just for new applicants. There was one that I just saw. Anything in the bill for the beauty industry, not specifically, but again, you guys can take advantage of PPP. So PPP is a great thing for the self-employed hairstylist, especially now that you can use your gross income. So if you don't know what I'm talking about, I did a live on that last Wednesday. It's available on my YouTube channel where I talked about the changes for self-employed people and how you can get more money in PPP, because now instead of using your net income, which might not have been very much, you can actually use your gross income, which can make a really big difference. Let's see. You can, if you want to. I usually suggest give it a couple of days and see what kind of progress is made before you put a bunch of different applications out there, but you can. Yeah, so this question has been asked a couple of times, but yes, if you've already been funded for your PPP, right now there is no way to go back and get it increased based on gross income. So definitely check out the live I did last week, Wednesday, that talks about those specific changes, because it goes into details about all of the changes. Thank you. Autumn's got me. Here's the YouTube video. You can click on that and you can see the changes for self-employed people related to PPP. Remember, PPP is scheduled to end on March 31st. So this bill does not extend PPP. It does add, I think, $7 billion, which is kind of a random number considering we still have, we've got well over 100 billion left in PPP funds. It may end up getting extended, but I would not count on it. So I would probably get your application in sooner rather than later if you want to get a hand on to go ahead and get your PPP loan. Okay. So that was a lot. I'm going to run now because it is over my 30 minutes, but make sure to tune back in on Friday. If I didn't get to your question, Fridays, I do my official Q&As on stimulus related things. So we can talk more about this on Friday and you can bring your questions then. And you will, and we'll talk all about all the things. Then 1:30 p.m. Central Time on Friday on YouTube and on Facebook, I will be here. And that is all that I have for you guys today. In the meantime, I've got lots of content over on YouTube. You can go and check out about everything that is going on as well. And I'll make sure to update you on anything further that I see that comes out. But again, we're expecting this to be passed today. It would be somewhat shocking if it didn't. I expect it to be signed as early as tomorrow. So we'll have to see how all of that shakes out. And then remember, guys, it takes a little while for them to get things up and running. We know that. We've seen it a couple of times now. So sometimes it's kind of that we just have to wait and see, which is like the catchphrase of this whole thing is like, let's just wait and see. Let's wait and see how this actually goes, because you can read the legislation, but as far as how things are actually going to work in the implementation, that's always where the question mark comes in. So anyway, you guys are awesome. Love you guys. Love you too. And I'll talk to you later.